Welcome to Matt Talks Mortgage, and on this channel we talk about literally anything and everything that you need to know to prepare for purchasing a home or refinancing. So what we usually do is we go over some common questions that we get from buyers around the country or locally here in Dallas-Fort Worth. One question we get a lot is, what credit score do I actually need to get a mortgage? And I think there's a big misunderstanding in terms of what score you actually need to get a mortgage and accomplish your goals. So today we're going to break down exactly the different programs available for different credit score ranges and how your score is going to affect the interest rate and monthly payment with each of those programs. And then lastly, we're going to talk about what to do to improve your score before even applying so you have the best chance for approval, a lowest interest rate, and best monthly payment. Let's just go over some credit score basics. Now, lenders currently use your FICO score. Now, there could be a change coming where they allow us to use the Vantage score model, but that's possibly in the future here. And that ranges anywhere from 300 to 850. And here's how they typically break that down. So if you've got a 740 FICO and up, they consider that excellent. If we've got maybe 700 to 739, they consider that good to favorable. 660 to 699, we're going to consider that fair, and now we're maybe getting a little bit higher rate. 620 to 659, that's usually the minimum for many conventional loan programs. And then 580 to 619 is what they consider maybe poor credit, and usually that's still eligible though for FHA loans and VA loans. And then anything below 580, we're very limited on our options, but still not impossible. Now, your credit score impacts not just your loan eligibility, but also the interest rate and the amount that you could borrow. So let's take a look at loan programs and their requirements. So each loan program has different credit score requirements. And here's a quick breakdown of each. So conventional loans typically need about a 620 or higher score. And of course, the lower the score, the higher the interest rate. And with conventional loans, typically the lower the score, the more you're penalized. The higher the score, the more you're going to see a better interest rate. Whereas FHA loans, they accept down to 580, sometimes even a little bit lower, and they're going to often penalize you much less. So you may not see a massive change in your interest rate from, let's say, 620 to 700. And they often allow a much lower down payment at 3.5%. You then have USDA loans, and usually they want to be a little bit higher of a credit score, even though it is a government loan. They're great for those who may be in a rural area, and they even allow 0% down, just like VA loans, as long as we qualify. Then you do have VA loans, of course, and they again allow us to go down to 580, some cases below. And again, this is a government loan, so they're not going to penalize you as much for your credit score, maybe being in the lower 600s like a conventional loan would. And then lastly, we have jumbo loans. Now, jumbo loans are anything that's going to be over the county's conventional loan limit. Once we reach that maximum, we're in jumbo loan territory. And usually in those cases, they're going to want to see better credit score. They're going to want to see higher down payments, and all of that's going to put you in a much more favorable position to get the payment where you want it to be. Now, here's why that matters in the DFW market. So as of fall of 2025, which is what we're going into right now, average 30-year fixed rate in Texas is hovering somewhere in the low sixes, so maybe let's say 6.4%. And the median home prices are, depending on the county that you're looking at, is anywhere from $345,000 to $465,000. So here's the kicker: a buyer with a 760 FICO on a conventional loan could save anywhere from $100, $200, maybe even $300 per month compared to someone who has a 620 FICO. Now, this is why it's so important to get with our team ahead of time, because in many scenarios, we can help boost that score within a 30-day period. So a perfect example, we just had a client who had a 680 FICO. We were doing a conventional loan with about 20% down. Now, they didn't know they had one item in collection from years ago, and it was only about $250. And once we paid that off and we got a letter from the collection company, it bumped their score from 680 to 770. Now, that's almost a 100-point increase in their credit score. It allowed us to drop their rate almost 0.5%, and it saved them about $200 a month on their mortgage payment every single month just by paying off a small collection item. Now, if you find yourself in a position where maybe you are on the lower end, maybe 580, low 600s, there are some things we could do to bump the credit score. And then if you do have a good credit score, we want to keep that credit score intact. Some basic stuff: pay bills on time. Right? If your balance on any of your credit cards is above 35% or 30%, you're typically going to see your credit score start to go down over time. So pay the credit cards on time and keep the balances low. Continue to pay your bills on time. Credit history and length of good credit history is a big part of your credit score. Now, while you're looking for a house, avoid new credit inquiries before applying and don't add any new debt. And then if you also have any disputes on your credit, let's go ahead and get those disputes taken care of, as oftentimes they do make us remove those during the process, and that could negatively affect your score. So as you could tell, there's several things we could do to bump your score, sometimes pretty quickly. And even a 20 to 40 point bump in your score can make a significant difference in both the rate and the options available to you. So the more options available to you, the better financial decision you could make when you go to buy the house. So again, what credit score do you need to buy a home in DFW? The simple answer, sometimes all the way down to 580. What we want to look at is finding a credit score and helping you get to the credit score that's going to allow you to get put in the loan program with the loan terms that is best for you and your family and makes sense for you financially. So again, the stronger your credit score, the more options and negotiating power that you're going to have. And that's what we'll review with you early on. So if you're ready to start that journey, reach out. I'm going to help review your credit. We're going to match you with the right program. We'll see what we could do to bump that score quickly if that's something that we need to do. That's going to get you one step closer, and maybe even the most important step, to home ownership here in the Dallas-Fort Worth area. So if this video is helpful, make sure to like the video, make sure to subscribe to Matt Talks Mortgage, and check out my website. There's actually a full-length blog on this exact topic, as well as a bunch of other tools and guides to help you succeed.